Have you seen the latest out of China? Are you looking for a car? You may want to travel there and buy one. It is $7,750 for a Seagull. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and it continues to astonish. It harkens back to the speech I gave at the Vancouver Resource Investment Conference, and big thank you to Jay Martin and Vrick for inviting me to speak there, as I called the talk Anatomy of a Seagull. And what it was about was how metals processing is basically creating an insurmountable lead in terms of the cost of manufacturing for China. And until the rest of the world starts processing its own metals, it will be at an inherent disadvantage. And so the real message here, as I called it in the speech, a Sputnik moment, that there is no time to wait. Just like when Sputnik went off into space, it was time to get into gear. If the West, and frankly, if the rest of the world wants to compete in manufacturing with anything to do with metal, and you could argue, even beyond metal, but metal is a clear area that is dominated by China. Put the shovel in the ground, not tomorrow, put it in today. If you're government and you want to keep manufacturing in your jurisdiction, you have to put the shovel in the ground actually yesterday, but it may not be in the ground yet, so you probably have to put it in today. Because as we see with the rare earths, which continues to be a massive issue in the United States and around the world, as you see with rare earths, they want to sell it to themselves first, in a sense. What we see in Myanmar with the shipments of rare earths dwindling, to maybe 40%, if memory serves, from a year ago, and those are the heavy rare earths, which are some of the most important ones, they don't even necessarily want to sell them, right? If China's being shut out of markets, they may just be fine selling their cars to the rest of the world and say, who cares about the West? Yes, it's a huge market. Yes, we want to be in it, but it's a huge and growing market outside of the West. And we can deliver cars, at least to our own people, at $7,750 US, probably in developing countries, in the African continent, in places like India, in places like China. I mean, frankly, in the West, I think I saw the average price of a car in the United States is something like $50,000 US. Let me see. I think I have the article here. So here's a CNBC article. China's EV price war is heating up. What's behind the big discounts? And a few key points here. Industry giant BYD announced a slew of discounts, some of nearly 30% or more on selected models. And these are already cars that are extremely cheap relative to the rest of the world. The average car price has fallen by around 19% over the past 2 years in China to $22,900. And here's the story. Competition in China's electric car market just got fiercer, with consequences for the domestic economy and even the global auto market. Industry giant BYD last week announced a slew of discounts, some of nearly 30% or more, across several of its lower-end battery-only and hybrid models. The budget-friendly Seagull compact car saw its price drop to $7,750. You heard that right. Other major Chinese automakers have begun following suit. Quote, BYD's action this time has made the industry rather nervous, end quote. Zhang Shi, an analyst with the China Automobile Dealers Association, said in Mandarin, translated by CNBC. Quote, the industry is in a state of relatively large shock, end quote, he said, noting smaller automakers are now more worried about their ability to compete. So this is a year after the initial shock, when we had, Volkswagen CEOs and all these CEOs, I think Elon Musk, basically seeing BYD's, new offerings and saying, not bad. Let's continue. The industry has been a rare bright spot in an economy that has been seeing slower growth and lackluster consumer demand. And we also have a quote from Morgan Stanley's chief China economist, Robin Jing, who said in a report Wednesday, quote, the latest car price competition underscores how supply-demand imbalance continues to fuel deflation. There is growing rhetoric about the need for rebalancing to more consumption, but recent developments suggest the old supply-driven model remains intact. Thus, reflation is likely to remain elusive, end quote. In a sense, in the West, it's like we like higher prices for some reason on real estate and on autos. And I suppose the reason is actually quite obvious, because these are major industries, major parts of the economy. If the real estate industry goes down dramatically, as we saw in China, that spells a big problem. If auto manufacturing, if all of a sudden the price of a car goes down to $7,750 US, what does that mean in terms of jobs, taxes, you name it? Now, jumping down a bit, in contrast, the average price of a new car in the United States was $48,699 in April, up nearly 1% from 2 years earlier, according to CNBC calculations of data from Cox Automotive. The average electric car price last month was an even higher $59,255. So when you look at the electric vehicle market, China is almost selling for 10% of the US average electric vehicle price. And BYD, of course, they own the ships. They own the entire supply chain from beginning to finish. Last I heard, they were partnering up with mines and even actually canceled a lithium joint venture, as we read recently. So they own the entire supply chain, and there is a lesson there, which is the West, and frankly, any country in the world, if they want to compete with anything to do with metals manufacturing, they must process their own metals. It is that simple. Now, continuing on this, we got this ominous headline out of Reuters via mining.com. Car makers warn China's rare earth curbs could halt production. Meanwhile, again, I'm back to Stan Lee here and the next comic panel. We just turned the page. Meanwhile, car makers warn China's rare earths curbs could halt production. This is June 1st. Global auto executives are sounding the alarm on an impending shortage of rare earth magnets from China. So they have two alarms going right now. There's shock at the $7,750 Siegel, and there is alarm. We may not even be able to get our rare earths, as we saw with Bosch last week. As I said, the first consumer, the first appliance maker that we saw that was telling us that their suppliers are starting to wave red flags that they can't get the rare earths they need. So let's continue with this story. Global auto executives are sounding the alarm on an impending shortage of rare earth magnets from China, used in everything from windshield wiper motors to anti-lock braking sensors that could force the closure of car factories within weeks. In a previously unreported May 9th letter to Trump administration officials, the head of the trade group representing General Motors, Toyota, Volkswagen, Hyundai, and other major automakers raised urgent concerns. Quote, without reliable access to these elements and magnets, automotive suppliers will be unable to produce critical automotive components, including automatic transmissions, throttle bodies, alternators, various motors, sensors, seatbelts, speakers, lights, motors, power steering, and cameras. Is there anything else in the car? I guess maybe the seating. The Alliance for Automotive Innovation wrote the Trump administration. The letter, which was also signed by MEMA, M-E-M-A, the Vehicle Suppliers Association, added that without those essential automotive components, it would only be a matter of time before U.S. vehicle factories are disrupted. Quote, in severe cases, this could include the need for reduced production volumes or even a shutdown of vehicle assembly lines, end quote, the group said. Scrolling down, both Alliance CEO John Bozzella and MEMA CEO Bill Long told Reuters on Friday the situation was not resolved and remained a concern. So again, this was written June 1st. Today is June 3rd. So we're talking the Friday that just passed, where the automotive associations are saying this is not resolved and we have a problem. Bozzella noted that the automotive issue was on the agenda during Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer's talks with their Chinese counterpart in Geneva earlier this month. Greer told CNBC on Friday that China had agreed to lift restrictions on the exports of rare earth magnets to U.S. companies and was not moving fast enough to grant access for key U.S. industries. Quote, we haven't seen the flow of some of those critical minerals as they were supposed to be doing, end quote. In a social media post Friday, President Donald Trump accused China of violating terms of a deal reached this month to temporarily dial back tariffs and other trade restrictions. And probably you saw this tweet, and now we can start to imagine what this tweet was about. Quote, China, perhaps not surprisingly to some, has totally violated its agreement with us, end quote, Trump said in a post on his Truth Social platform. Was he talking about rare earths? China's embassy in Washington responded by saying it was the U.S. that was abusing export controls in the semiconductor sector. Scrolling down a bit, while a handful of licenses have been granted, including to some Volkswagen suppliers, Indian automakers say they still have received none and will have to stop production in early June. German auto parts maker Bosch said this week that its supplier had been bogged down by China's more rigorous procedures to receive export licenses. A Bosch spokesperson described the process as, quote, complex and time-consuming, partly due to the need to collect and provide a lot of information, end quote. Now, we saw that last week, so Scott Bessent, I don't know if you saw these Face the Nation clips, but there was a tinge of desperation when Scott Bessent was describing the rare earth situation with Margaret Brennan in this interview, and that was on Sunday. So to a certain degree, this is a breaking story. Yes, we've been hearing about the rare earths, but now it's kind of kicked up a level, isn't it? You have the President of the United States saying they violated the terms of our agreement. You have Treasury Secretary Scott Bessent sounding the alarm, saying that they are slow walking. And so here's just a quote from a CBS News article on the Scott Bessent interview. On Sunday, Bessent acknowledged that the products China is withholding include critical minerals, which are materials used in high-tech products such as computer chips and electric vehicle batteries. And every other part of the electric vehicle, as we were just learning. And listen to this. CBS News. The export of rare earths was thought to be at the center of the disagreement. And here's a quote from Scott Bessent. Quote, the fact that they are withholding some of the products that they agreed to release during our agreement, maybe it's a glitch in the Chinese system, maybe it's intentional. We'll see after the president speaks with the party chairman, end quote. So there is a sense of desperation, like, let's see if, the president can fix this for us, because we don't have any rare earths coming in, is basically how this sounds. Bessent also said, quote, what China is doing is they're holding back products that are essential for the industrial supply chains of India, of Europe, end quote. And I think part of the reasoning from China's point of view of cutting off Europe and India is the sense that these could be basically washed, is that these, other third parties could buy the rare earths and wash them, so to speak, through to the United States. So there is a real cutoff going on here, a real power play, you might say. And I think the U.S. now has to ask itself, what are you going to do about it? It's an interesting question, isn't it? Let's continue. So May 30th, 2 days before the Scott Bessent article here, or interview, China signals softer stance on rare earth export curbs. This is Reuters via mining.com. And it says here, China said it would cooperate further with other countries over its rare earth export controls as shortages put auto and semiconductor makers in Europe and India at risk of closure. While a handful of licenses have been granted, including some Volkswagen suppliers, Indian automakers say they have received none and will have to stop production in early June. And we have a quote from Foreign Ministry spokesperson Lin Jian, who said on Friday about the controls, quote, we stand ready to strengthen dialogue and cooperation in the field of export control with relevant countries and regions and stay committed to maintaining the stability of global production and supply chains, end quote. Chinese state media reported on Wednesday that the country could relax its curbs on rare earth exports for Chinese and European semiconductor firms after meetings between industry and the Ministry of Commerce, where the issue of shortages was raised. The New York Times reported earlier this week that the United States suspended some sales of critical technologies to China, including parts for state-owned plane maker COMAC, in response to China's restrictions on exports of critical minerals. Now, the thing is I would still argue that China has the advantage here because they own the beginning of the supply chain. And if you own the beginning of the supply chain, if you're not going to give parts to China for their plane, they'll simply make the parts themselves. And they'll probably make it cheaper. And this is the thing, I was watching a history series from the Great Courses, which I highly recommend, now called Wondrium. I think it was the Nomadic Empires of the Steppes or something to this effect was the title of the series. And what you see with the Khans and Genghis Khan was part of their whole strategy, and the way they worked was they had the Chinese engineers at the beginning who would help lay siege. It was a crucial part. According to the lecturer, Kenneth Harl, this was a crucial aspect of their whole offensive as they moved across, Asia and Eastern Europe and the Middle East. The Chinese engineers. So there is nothing new about, China's engineering prowess. This is not something of the last 50 years where China went to, great schools in America and all of a sudden learned how to be engineers. This goes back centuries, if not millennia. As we all know, with these crucial inventions that they've provided, including paper and gunpowder, but, to give credit where it's due, it was the West that really took gunpowder to a new level. Lest I digress. So the question remains, who has the real leverage here? We have another headline. Just to tie the bow on this whole story, Trump-Xi likely to speak soon on minerals trade dispute, aides say. That's Reuters, June 1st. So it seems to me that, frankly, the biggest point of contention right now between China and the United States, the two main superpowers, are rare earths. Isn't that fascinating? Here we are once again at the center of the news narrative here, as we always have been, but now being recognized as such. Another headline, China's rare earth script gives Xi leverage in U.S. trade duel, Bloomberg News via mining.com. And as it says in this article, scrolling down a bit, the main sticking point appears to be critical minerals. With U.S. officials complaining Beijing hasn't sped up exports needed for cutting-edge electronics. The U.S. has said the decision to reduce tariffs hinged on a Chinese agreement to lift export controls on some rare earths. So here's my question. We get the numbers, between 60 and 70% of rare earths come from China. But my question is, how many are processed in China? Is that 60 or 70%? Is that the 60 or 70% number? Because in a sense, you still have 30% out there. Where are those rare earths? It's still a significant amount, isn't it? And we have a quote from Deputy U.S. Treasury Secretary Michael Falkender, who said Monday in a brief interview with Bloomberg Television, quote, "It's going to require a discussion between the presidents of the two countries," end quote. White House Press Secretary Caroline Leavitt said Monday it was likely the leaders would speak this week. The Chinese embassy in Washington did not immediately respond to a request for comment. Who has the leverage here? What's interesting about this too? There was a sense when this first got announced that they would be reducing rare earths, that this would take 6 months. Feels like it's been about 6 weeks since China really got serious about, limiting their exports, and here we are. So pretty interesting there. Another headline, this is the Northern Miner, Japan floats rare earth cooperation with U.S., according to a report. And just a couple of paragraphs here. Japan is looking to bolster its economic ties with the United States by establishing a partnership around critical minerals such as rare earths, local media reported. Japanese Prime Minister Shigeru Ishiba presented the proposal in a phone call with U.S. President Donald Trump on Thursday as part of negotiating a lower U.S. trade deficit with Japan, according to the country's largest newspaper by circulation, the Yomiuri Shimbun. So it is top of mind, as I've been saying here, frankly, for years, for leaders around the world, these metals. And here it is not second or third in terms of priority, it is first. As it says here, rare earth minerals have taken center stage in America's trade tussle with China, which weaponized its strong position in the supply chain by restricting exports to the United States. China controls more than 60% of the world's mine production and almost all of the processing. This is the question. Because otherwise I'm saying, okay, they control 60%. There is still another 40%. But if we take this line at face value, that they control 60% of the world's mine production and almost all of the processing, in effect, they control almost all of the rare earths market, hence the situation that we're in. Otherwise, with 40% out there, what's the big deal? So this comes down to the art of processing rare earths. As James Dines mentioned in his newsletter, 10, 15 years ago, rest in peace, this is as much of an art as a science, processing these rare earths. So it's not something that's simply just, get your guidebook and, build your own processing facility, right? There's a whole expertise here that is required. Another headline, Lynas secures rare earth feed in Malaysia. This is by a staff writer at Northern Miner. Lynas Rare Earths, backed by Australian mining magnate Gina Rinehart, has secured additional feedstock for its advanced materials plant in Malaysia. The company says, the MOU, quote, is a significant step for Lynas and the Malaysian rare earths industry, bringing together Lynas Malaysia's over a decade of rare earths industry expertise and Kelantan State's rare earth resources. End quote, Amanda Lacaze, Lynas's CEO and managing director, said in the release. So, zooming out a bit, abstracting this whole conversation on rare earths, the Financial Times has an opinion piece, How to Break China's Stranglehold on Critical Minerals. It's kind of interesting. I mean, things, again, we've been discussing here for 5 years, actually, which is, should the government intervene? Do we need subsidies? As it says here, there are 3 potential fixes. The first is for governments to step in. Subsidies are no longer a no-go area. Both the US and EU have mobilized tens of billions of dollars for chips, for example. Australia has ponied up loans for a rare earths refinery to be developed by Iluka Resources, supplementing initial funding when construction costs overran. And I think of that rare earth production facility in Saskatchewan. I mean, didn't they declare bankruptcy? I mean, I thought that was the most absurd headline I'd ever seen. I mean, have they disappeared? I remember showing amazement that, we're not going to save that thing? We're going to save the banks in 2008, but we're not going to save, as rightly called, the building blocks of the supply chain and the economy? So the other 2 fixes here, the second potential fix is to find new, cheaper ways of extracting minerals, basically suggesting that AI could provide some solutions. Not a terrible path to go down. This is an all-of-the-above type situation. And last, find alternatives. Cobalt-rich batteries are still duking it out with lithium iron phosphate batteries, which are winning in China. But manganese-rich versions, such as those underway at Europe's Umicore Chemicals, are gaining traction. In other words, it doesn't look like there are too many options, other than the first, which is frankly subsidies. Nobody likes it, but I mean, you have to ask yourself, do you want to own your own supply chain, or do you want to forever be at the mercy of another country? And on top of that, what you have to do is actually be as good of a metals processor as China. And they've been doing it for 20 years. So there's a big mountain to climb here. And as I was saying at the start of this episode, you don't need the shovel in the ground tomorrow. You need it in today. And actually, you need it in yesterday. But today will hopefully do. Like, we see big moves, but I still don't see the kind of mobilization that the magnitude of this issue is demanding. Then the question is are you going to be able to make these metals as cheap? So once again, all roads lead to metals. As I was saying in this, speech I gave at the Vancouver Resource Investment Conference, what's old is new in terms of the importance of metals processing in civilization. To try not to overstate things here, but if you look at the history of civilization, it's basically metalworking and writing. So what's old is new. Coming up, we have a wonderful show ahead of you, more fascinating news stories, including more updates on Barrick and Rio Tinto's Jacob Stausholm, and a wonderful interview with Ore Group Chairman Stephen Stewart. We discuss the situation of mining in Canada, whether Stephen has seen any movement yet on the policy front to make life easier for explorers and miners in Canada. So a wonderful extended interview there. As well as for this week's Spotlight, we have Jean Desjardins, Executive Director of the Indigenous Resource Network, who tells us about all of the, frankly, wonderfully positive work that the Indigenous Resource Network is doing in Canada. So a wonderful show ahead of you. If you want to find us online, you can find us at northernminer.com. You can find us on X at northernminer. You can find us on Instagram at The Northern Miner, and on Facebook and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Jean Desjardins, Executive Director of the Indigenous Resource Network, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Jean Desjardins, Executive Director at the Indigenous Resource Network. John, welcome to the show.
Oh, it's my absolute pleasure, Adrian. Thanks for having me, and thanks for having the network. Well, it's great to have you. Sounds quite interesting. So, could you tell us a little bit about Indigenous Resource Network? What are you guys up to at the Indigenous Resource Network?
So the Indigenous Resource Network is a grassroots network of Indigenous workers, Indigenous entrepreneurs, Indigenous people that work in the natural resource industry. That's essentially our membership network. And then, of course, all the supporting industries, people who support our purpose. And we have a strong purpose to see, I think, greater Indigenous participation in the resource sector and to realize the full value of that for everyone. We started the network about 5, 6 years ago, really a loose collection of Indigenous people working in the sector who had deep experience in the sector right across value chains, internal to organizations, external through supply chain. And through conversations, we were just tired of seeing, constant representation and constant media attention on the sensationalization of Indigenous participation resource development. We just felt that wasn't useful, and it wasn't, I think, the representative experience. A lot of Indigenous people just were very interested in kind of moving this forward. The other part to that is quite political and, again, sensationalized in terms of representation. We see things like blockades and then challenging decisions and everything. And we thought, well, what about the opposite side of that? What about the good stories? What about all these great agreements that people are realizing and taking advantage of? What about Indigenous people participating within industry that are moving through the organizations and participating meaningfully? And we wanted to just tell more stories around that. And we did. We started that up, and we've been growing since, right across industries through our membership, over 2,000 people, and growing, quite a bit over the last few years, and then industry sponsors and industry alliances, and then, of course, a relationship with the public and through that, the government.
Okay, excellent. And I love how you mentioned how, in a sense, good news is underrepresented in large degree. And so it's a great point you bring up. So in terms of the, I guess, pragmatics of this, how does this work? Like, it sounds like this is advocacy. So are you putting out, say, press releases on these stories? It almost sounds like a media organization, Indigenous Resource Network. What is the day-to-day, so to speak, kind of actions that this organization takes? Is it talking to companies, government, and putting out information? Like, how does it work?
Yeah, absolutely. Like it's kind of a full gamut in terms of, advocacy. And so there's certainly a media side to what we do. We generate a lot of content. We engage with our members. We engage with Indigenous people in industry, generate a lot of content that way. We actually even, media-wise, we do documentaries now, and we're on our second and plan for our third in the energy industry. And just around telling really good stories, Indigenous participation, and sharing that. We do media releases and news releases, op-eds, and so we write a lot of opinion pieces on topics of the day. But a big part also what we do is, providing feedback on policy and policy advocacy as well too. Do we understand kind of the full unintended impacts of certain policies? What does good policy look like? What's working in other places in terms of consultation, in terms of achieving consent, even supporting regulatory efficiency, and where we can, I think, see a stronger, more efficient system that supports quicker development around resource development. And we are at tons of events providing thought leadership on these topics. And so, a big part of that is just having a presence and being out there and having a positive energy about these things and demonstrating that, that there's people doing all sorts of really neat things, and we need to see that. And hopefully, raise the bar and level set and realize there's incredible business value in deep, meaningful relationships with Indigenous people. It's not, it's reconciliation, it's economic reconciliation, it's all those things, but it's also, just from, kind of a profit and a risk perspective, it's providing a lot of, meaning and making a lot of sense to everyone involved in, that full spectrum, from the public and government, from industry, and from Indigenous people and communities.
It seems like important work as you describe it. And so is this national in scope? Of course, you're based out of Saskatchewan. Is your target audience, or say if you're a member, is this Canada-wide or is it more specific?
It's interesting. We are certainly Canada-wide. And I think when we started that, we had representation, I think a little bit more heavy in Western Canada, but very intentionally and deliberately grew outside that, sought board representation, sought participation, sought staff members from outside Canada. So we are a national organization across all natural resource industries, exploring relationships even with things like Indigenous people in agriculture as a resource, but forestry, fisheries, and of course mining and energy, renewables, non-renewables, oil and gas, nuclear and things like that. And so we just find we have Indigenous people everywhere, and it makes sense to be involved with a lot of different things. And so was very fortunate. My background's quite heavy in mining, but also in resource development in general, in forestry and fisheries, and certainly in energy sector. And so through construction and whatnot. And so I did have at least the background and the depth to be able to understand some of the technical side, being an engineer as well too, being able to navigate these conversations. And so that capacity, I think, just lent itself to, let's support right across sector, right across the country. But interestingly enough, we've been invited internationally. And so we participated in international discussions as it relates to Indigenous relations in the US, in Scandinavia, in Norway, and then engaging with people in Alaska, as well as Greenland. So just some of the discourse that we do, it just makes sense to people, and it's positive, and it feels useful, and we get engaged that way. So interesting to see our growth. It's exciting, actually.
It is exciting. And again, I love how you emphasize the positivity, unfortunately, an underreported kind of aspect of the news. And so would you describe your mission then as primarily educational? It seems that way, but how would you describe the mission of the Indigenous Resource Network?
Yeah, absolutely. It is two parts. It's educational, it's awareness, but it's also, from the advocacy side, it's, how do we see the elements that we're creating awareness and education around being implemented in an organization. The other part to our mandate is that we do engage with industry organizations as well, too, and try to participate on conversations around internal policy, procurement and employment, recruitment and retention. So yeah, there's a lot of education awareness, but we're also there to say, what are you doing? And how can we help you understand, the benefit of doing it this way, which is, more meaningful for not just for Indigenous people, but for yourselves. But yeah, we get involved in those conversations as well, too. And we find ourselves not just talking about things, but also helping to support the operationalization of a lot of these experiences that we're collecting.
Okay, super interesting. And if you're a member of the Indigenous Resource Network, what do you get? What's involved?
So membership, it's incredibly easy to sign up. It's on our website. We thought it really important. Our membership base is Indigenous workers across all spaces, and we didn't want membership fees to be a barrier. And so we seek funding through a lot of the projects we do, through documentaries and through the partnerships. Even some of our members actually, donate to our cause. We don't ask for it. But anyway, becoming a member is pretty easy. And the membership benefits, we're actually, driving into that much more deeply. But, exposure, giving them an opportunity. Secondary purpose is we get to profile a lot of their activities and their businesses and their communities. And they see the great marketing value behind that. And so we have people signing up for that. Networking, a lot of the benefits too is our advocacy positions are to their benefit. And so, a lot of them realize that and see that, and then they want to support that. And of course, it's just being part of a communication stream and seeing what's going on around there and then participating in that way. And so getting to see a lot of that information. But yeah, we're organizing, I think, more kind of member-to-member engagement events. And how do we continue to profile and support? But a big piece of that is just sharing their story. How can we share your story? And we're fortunate that, a majority of our members are not just willing, but able and incredible storytellers themselves. And I think that's the biggest aspect of being a benefit of the network. And again, kind of part of that positivity and part of that energy.
Just out of curiosity, let's say you're an exploration company in northern Saskatchewan. Does it make sense to reach out to the Indigenous Resource Network as a kind of, some kind of reach out? I don't know if there's any benefit. Does it make sense in that case? Or is it mostly, we're here for workers and to really just address their specific concerns?
Absolutely makes sense. We get reached out quite often by different industry and organizations because, again, our storytelling, they realize the benefit of our storytelling. They see that and allow us to do that. When we tell stories in regards to what a lot of these activities are on, we add almost a objectivity and a kind of a third-party credibility, I think, to a lot of these things. It's Indigenous people recognizing the positivity and the benefits of that. And we find we have a greater audience. And so, an exploration company in northern Saskatchewan is doing something incredible in terms of business recruitment or worker engagement or development or developing, some agreements and things like that. Just having an organization like that to kind of vet some of that practice against. And then also to tell the story around it and share some of the information around it. And so that's where, we have a lot of relationships in that space. In the mining space, it's continuing to grow. It's an area important to us in terms of, everything that's going on, right from consent to critical minerals to some of the, challenging areas in terms of Indigenous relations. But yeah, we can reach into our network and draw from some of that experience. If there's people or developers or proponents or industry, we absolutely welcome that. We're actually looking for more relationships in the mining and exploration space.
It's almost like the Indigenous Resource Network is filling a gap that people might not have been aware of before, but now that it's being filled by you, it seems like, why didn't this exist before to a certain degree, or why isn't this more common? So on that note, I mean, as we start to wrap up here, John, what are the larger goals, in a sense, like where do you hope to take the Indigenous Resource Network?
So I think the network is certainly on a path to support developing a social license around resource development, a stronger social license, a stronger sense of trust and transparency around a lot of the things that, deepen that equitable participation of Indigenous people in the sector. And we see ourselves, helping to kind of chart a path there and draw awareness around the incredible business and social value of partnership, right? And so I think transforming the narrative where, Indigenous people are no longer simply a stakeholder, a box to check, but it's like we have to engage in deeper relationships with them. And it's really good for business. It helps to de-risk, it helps to shorten timelines, inspire public confidence around the regulatory process. And I think realize the equitable benefits of that. Indigenous communities, I think, for the most part, kind of tired of bearing, I think, a lot of the environmental risk and risk to rights. And that's being transformed, that's being changed, and it's being recognized that, there's much more weight to that conversation. And we're hoping to drive towards that, right? And so I think to the point on one side where if you have a developer come in, there's an idea and understanding, you can streamline that process, and there's a welcoming and there's resilient support and consent in regards to doing that. And then on the other side, potentially Indigenous communities mobilizing to be able to capitalize and finance development, if that's the opportunity, if they can manage the risk, especially if it's in regards to mining and long-term mine development. But there's no reason that conversation can't happen. And then, if it's not the full-scale project, is there parts of a mine development project that could make sense that are less risky? And yeah, we just want to build that relationship where Indigenous people are saying yes and no from a self-determined, capable perspective and on how they want to involve. But ultimately, at the end of the day, they recognize the opportunity. They influence how these things are done sustainably. And I think it's a win-win-win. Government's happy, industry's happy. And if the Indigenous are not industry, Indigenous communities are happy.
John Desjardins, Executive Director at the Indigenous Resource Network, thank you for joining us and sharing everything that you're working on.
Absolutely. My absolute pleasure. Thanks for having me.
And thank you once again to the Indigenous Resource Network for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit indigenousresourcenetwork.ca. Turning to the website, Trump celebrates Nippon Steel deal with rally at Pennsylvania plant. This is Reuters via mining.com. U.S. President Donald Trump heads to Pittsburgh, Pennsylvania on Friday to headline a rally to celebrate Nippon Steel's planned partnership with U.S. Steel, signaling final approval for the deal could be on the horizon. Proponents of the transaction are hoping his visit to the state where U.S. Steel is headquartered will cap a tumultuous 18-month effort by Nippon Steel to buy the iconic American company, beset by union opposition and 2 national security reviews. But the deal is possibly not entirely done. Following Trump's posts on Truth Social last Friday announcing the rally and appearing to endorse the merger, he sowed doubt on Sunday, describing the deal to reporters as an investment with, quote, partial ownership, end quote, with control residing with the U.S. So, resolution perhaps in sight? Continuing on, aluminum premium for U.S. buyers soars after Trump doubles tariffs. This is Reuters via mining.com. Premiums for consumers buying aluminum on the physical market in the United States soared on Monday after U.S. President Donald Trump said he planned to increase tariffs on imported steel and aluminum to 50% from 25%. The U.S. is heavily reliant on aluminum imports. About half of all aluminum used in the country for transport, packaging, and construction is delivered from elsewhere, with the vast majority coming from Canada. The new tariffs are due to take effect on June 4th, so tomorrow. Buyers on the physical market usually pay the London Metal Exchange benchmark aluminum price plus a premium covering taxes, transport, and handling costs. So very interesting there. Continuing on. Rio Tinto split with CEO Stausholm over conflicting priorities. This is Reuters via mining.com. So the fallout over Jacob Stausholm continues. And it says here, Rio Tinto's board and Jacob Stausholm agreed to part ways last week amid mounting concerns the CEO was reluctant to follow board priorities, including focusing on costs after years of expansions in lithium, copper, and iron ore, 3 sources said. Rio, the world's second largest listed mining company, surprised investors last week by announcing Stausholm would step down later this year when a successor is appointed. No reason for Stausholm's exit was given, and sources said it was not tied to any scandal. The CEO had as recently as 2 weeks ago given no indication of his departure at a major industry conference in Spain, according to 3 sources who attended. Reuters spoke with 6 people who were familiar with board considerations or who had been briefed on them or briefed by management. They agreed to speak on condition of anonymity to discuss sensitive internal matters or private conversations. Rio Tinto declined to comment for this story, while Stousholm did not respond to requests for comment. One source said Stousholm became more likely to push back on board suggestions and too quickly dismissed opportunities the board felt could have been better explored. One of those opportunities included Stousholm's rejection of an approach by Glencore executives last year seeking a potential merger, according to a person familiar with the matter. Another related to reviewing options around the stake of its largest UK shareholder, Chinalco, which came up with investor pressure for the miner to review its dual Anglo-Australian share market listing, said the source. While the board backed Stousholm's investments and strategic decisions, it held concerns that rising costs had to be dealt with now rather than in a few years' time, 2 of the sources said. The board told Stousholm that he must put more focus on cost cuts and operational excellence, but he was resistant and they decided to part ways, 3 of the sources said. Quote, "Nothing else changes. The board is happy with the growth options. They are happy with lithium. The strategy is the same," end quote, one source said. The aluminum division boss, Jérôme Pécresse, was seen as a potential replacement. All of the sources said this. Pécresse may have an advantage given his management style focused on cost-cutting, one of the sources said. And I thought the last line of the article was quite interesting. Quote, "Rio doesn't need another visionary right now," end quote, the source added. So I was speculating last week if someone was waiting in the wings here. And it sounds like Jérôme Pécresse is maybe the top candidate, interestingly. So it continues at Rio Tinto. Continuing on, Barrick asks World Bank Court to intervene in Mali proceedings. This is Reuters via mining.com on May 29th. Barrick Mining has asked the Arbitration Tribunal of the World Bank to intervene in legal proceedings in Mali, as the miner faces the possibility of the Loulo-Gounkoto mine falling under the control of the Mali government. Barrick's move comes as a local court in Mali is expected to rule on June 2nd on the government request to put the Canadian miners' gold mine under a provisional administration. Now, scrolling down a bit, in a filing with the International Center for Settlement of Investment Disputes, made public on Wednesday, Barrick asked the Arbitration Tribunal for, quote, provisional measures, end quote. And we have an explanation by Timothy Foden of international law firm Boyce Schiller Flexner, who said, quote, "Put simply, provisional measures means that Barrick has applied to the tribunal for an order requiring Mali government to refrain from taking further actions that would exacerbate the dispute, including Mali's effort to place the mine into provincial administration." Barrick did not immediately respond to an email query from Reuters. Mali's Mines Ministry did not respond to a Reuters email query either. And then we had a headline on June 2nd from a staff writer at mining.com. Mali court postpones ruling on Barrick's Loulo-Gounkoto gold complex. A Malian court has for the 3rd time postponed a hearing on whether to place Barrick's Loulo-Gounkoto gold complex under provisional administration, Reuters reported on Monday. The decision has been delayed until June 5th. According to Issa Aguibou Diallo, a judge at Bamako's Tribunal de Commerce, who made the announcement during proceedings without providing a reason. Continuing on, the copper market has been turning heads somewhat the last few weeks. Here are a few headlines. Glencore buys Russian copper on LME to feed tight Chinese market. It's Bloomberg News via mining.com. Glencore has been buying Russian copper on the LME and plans to deliver it to China in a trade that highlights a squeeze on supplies in the world's largest copper consumer. In the past 3 trading sessions, there have been requests for delivery of about 15,000 tons of copper from LME warehouses in Rotterdam, according to exchange data, drawing down available exchange inventories to the lowest in a year. Glencore was the key trader behind those withdrawal requests and is making plans to deliver the metal, which is Russian in origin, to China, according to people familiar with the matter. The Glencore trade is noteworthy because it involves sizable volumes of Russian copper, generally seen as the least desirable material. So more evidence that the copper market is being squeezed. And of course, in the Congo, it's coming from both sides here. Flooded mine in Congo is the latest threat to global copper supply. This is Bloomberg News via mining.com. Water levels have risen after pumping and electrical infrastructure in the Kakula underground mine was damaged. Ivanhoe's Chinese partners, Zijin Mining and CITIC Metal, are helping to secure powerful pumps that can help remove the water. The impacted mine accounts for at least 70% of the complex's current production, according to a note from analysts at Citigroup. The flooding could shut the Kakula underground operation until at least the fourth quarter, Citi said, while adding that the output can be ramped up without significant cost once the water has been pumped out. Then we got a follow-up story just yesterday. Ivanhoe rebounds on planned partial restart of flooded copper mine. This is by a staff writer at mining.com. And it says here, Ivanhoe has laid out plans to dewater the Kakula copper mine in the DRC that could result in a return to operations as early as this month. Its shares rebounded on the update. So conflicting analyses on the magnitude of the issue there. Another headline, iron ore pessimism subsides despite looming Simandou supply. This is Reuters via mining.com. And just a couple of lines here. The prospects for iron ore prices are improving thanks to a lower than expected global surplus this year. Analysts and traders say though looming new supply from the giant Simandou project in Guinea remains a long-term downside risk for prices. And we're discussing Guinea in detail last episode, and continuing on another headline which was quite interesting. Fortuna Mining buys 15% of Awale Resources, and they have the Odienne project in Côte d'Ivoire. So Fortuna is still liking West Africa, but shifting over to Côte d'Ivoire, interestingly. And a few more headlines. Diamond mining industry cracks under pressure. This is Cecilia Jamasmi at mining.com. Quite a head-turning story here. The global diamond industry is undergoing a rapid and unprecedented collapse, according to tech entrepreneur and academic Leanne Kemp. Though some industry analysts argue that while the downturn is severe, it is not terminal. Plunging revenues, halted operations, and growing doubts about diamonds' cultural and economic relevance are just some of the symptoms cited by Kemp, who insists the industry isn't just slumping. She said it's, quote, disassembling. Quote, these are not isolated events. They are symptoms of an industry whose cost structures, cultural relevance, and geopolitical foundations are no longer fit for the moment, end quote. And finally, just a couple of headlines out of Canada. Canadian provinces make pitch on new pipelines, ports, and mines. It's Bloomberg News via mining.com. Canada's provincial leaders urged Prime Minister Mark Carney to back new oil pipelines, electricity grids, critical minerals mines, ports, and railways at a meeting on Monday meant to identify nation-building projects to be fast-tracked. And finally, Ontario First Nation groups slam mining-focused Bill 5. It's by Blair McBride at the Northern Miner. Environmental groups and some First Nations oppose Ontario's Bill 5 to boost mining despite changes by Premier Doug Ford, who calls it the opportunity of a lifetime. And here's Grand Chief Alvin Fiddler of the Anishinaabe Aski Nation, or NAN, quote, Bill 5 is a direct attack on our nations, our people, our treaties, and our future generations, end quote. So the debates continue as to where this will all land. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.41%. That is down 0.06% on the week. The UK 10-year gilt is also lower at 4.63%. That is down 0.05% on the week. The Italy 10-year bond is yielding 3.5%. That is down 0.06% on the week. And the German 10-year Bund is yielding 2.5%. That is down 0.04% on the week. And the Japanese 10-year bond is bucking the trend. It is higher at 1.5%. That is up 0.04% on the week. So overall, 10-year yields coming down, except for Japan. Turning to precious metals, gold is trading at $3,355.60 per ounce. That is $34 higher than last week. Silver is trading at $34.42 per ounce. That is $1.06 higher than last week. Platinum is trading at $1,057.60 per ounce. That is $26 lower than last week. And palladium is trading at $985 even. That is 50 cents lower than last week. And turning to industrial metals, copper is trading at $4.83 per pound. That is 2 cents higher than last week. Iron ore is trading at $99.12 per metric ton. That is 69 cents lower than last week. Aluminum is unchanged at $1.12 per pound. Lead is trading at 90 cents per pound. That is a penny lower than last week. And nickel is also lower at $7.03 per pound. That is 3 cents lower than last week. Tin is trading at $13.79 per pound. That is $1.10 lower than last week. Cobalt is unchanged at $15.29 per pound. Lithium continues to fall through the floor at $8.43 per kilogram. That is down 27 cents on the week. And uranium is slightly higher at $71.85 per pound. That is 30 cents higher on the week. And finally, zinc is trading at $1.22 per pound. That is a penny lower on the week. Zooming out, we continue to see a sideways market here, perhaps showing uncertainty in the general direction of the markets. Nevertheless, metals retain a bid, with silver looking somewhat bullish here at $34.42 per pound, looking like a bit of a breakout, and lithium turning heads on the downside. And those are your metal prices. Coming up, I'm very pleased to welcome Stephen Stewart, chairman of the Ore Group. We discuss mining in Canada, policies that could help, the recent election in Canada, what was discussed, and more. I hope you enjoy the conversation, and I will see you on the other side.
Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Stephen Stewart, chair of the Ore Group and chair of YMP Scholarship Fund. Stephen, welcome back to the show.
Great to be back, Adrian, with you in the Northern Miner. Always a pleasure.
Indeed, it is a pleasure for me as well, Stephen. We've been tracking, in a sense, your progress here, and we've had conversations for a few years now. And so it's always interesting for me whenever we see potential difference or evolution in policy in terms of what politicians are saying. Of course, permitting has become a global political issue. It's always interesting for me to hear the difference between the theory, the abstraction, so to speak, and the practical reality, what is, in a sense, true for you. And so I guess to open up our conversation here, how are things going? Are they improving? You're in the exploration sector. How are things going?
Well, Adrian, it's too early to tell. However, there's definitely been a sea change in how politicians of various authorities and jurisdictions are characterizing mining and its importance, and the timeframes, more particular, the timeframes between discovery to production. So I would suggest that the fact that they're talking about this, which is certainly in the West, the number one issue, risk that we face, which is time to permit from discovery to production. I'm glad they're paying attention to it. I'm glad they're recognizing things have taken too long. 20, 30 years is just unacceptable and uncompetitive. But it's too soon to say if that is political narrative or things that are said just to get votes, or if it's going to translate to boots on the ground. So long story short, on the front lines where I am on permitting, nothing has changed. I don't think certainly, and I speak more intelligently on Canada than anywhere else, but obviously the United States has had, I would say, a much more aggressive change. And one could argue in Canada, on the federal side, we haven't seen a whole lot of change. It appears to be the same regime, although a new leadership. Our new Prime Minister, Mark Carney, is saying the right things. Let's see if he brings it to action. I mean, I guess the bottom line is I'm not one for words. I want to see action. And we just haven't seen it yet. In fairness to them, they've only been in there for a minute.
And it's a fair point in a sense, but nevertheless, it is interesting. You have not seen any change in the day-to-day. There's been no forms that have been sent, or you have not checked out a website where all of a sudden things are different in your experience so far.
Again, just speaking to Canada, which is a very big place, the federal government have certain authorities, but primarily the mineral tenures fall to the provinces. That said, I do believe the federal government does set the tone. But to answer your question, no, I've received no memos or inquiries whatsoever. I've certainly been very vocal to all forms of government, federal, provincial, municipal, and First Nations, working and making suggestions. We do take a lot of time and effort and care because we do care about Canada and the natural resource extractive industry. So we have been lobbying on our own accord privately to these forms of government on what we do think need attention and what will really move the needle and ultimately allow capital to flow into our sector and more specifically into our country. Because when people look at investments, capital tends to flow towards the path of least resistance. And when projects are facing decades-long permitting or even the perception of it, it flows elsewhere to places, let's just say, a lot of people are referencing West Africa, where you can get a project permitted in 3 to 7 years. Again, there's lots of variability in that, but there's no question the permitting regime is faster. Now, are they taking greater liberties in certain aspects? Certainly. However, I would suggest that the multi-decade time frame is not about being really safe on the environment or consultation. It's more about bureaucracy, the left hand not talking to the right hand, as well as not having clear leadership direction on what Canada's objectives are in the natural resource sector. Too often, the narrative of the past little while, past multi-decades, is we're almost ashamed to have natural resources, as opposed to viewing it as a blessing. Because it really is a blessing if it's handled properly, of course, with great care to the environment. Everybody wants clean air and clean water for their children. Everybody understands and respects community impacts because digging a hole in the ground has impacts. But I think we can do a better job at moving these things more expeditiously and ultimately more responsibly, because it's these communities up north, typically where these deposits are or will be developed, they need desperately, oftentimes, including the First Nations, they need economic development. So I think everybody wins if we can, let's just start with cutting the timeframes in half. I don't think that's unreasonable. I think that should be our stated goal. I think we need to hit those timeframes to hit the supply constraints, whether it's the buzzword of critical metals or just the good old-fashioned base metals, and even gold is a necessity. I think that's probably one of the most important metals around, but we need to develop our resources in order to produce the widgets and the infrastructure to be competitive and to grow and to sustain our way of lives, and also compete with the East, because they have been eating our breakfast or lunch, whatever the saying goes, but we really want to be competitive. And I've said this, I think I said this on your last podcast, I believe unequivocally that Canada should be the wealthiest nation on earth on a per capita basis, because we've got about 40 million people, got the second largest land mass and one of the best endowments in the world, oil and gas, yes, oil and gas, copper, diamonds, uranium, gold, nickel, you name it, we got it. And we don't have the density that you would face in, say, Europe or other places. So we have these natural advantages that we really need to capitalize on and move away from the misinformation that mineral resource development is somehow the bad guy. There are trade-offs in life. We all understand that. So we need to get back to productivity, reality, and make Canada a powerhouse in mining and metals again.
Indeed. And it was quite a shift in a sense. I mean, tell me if you read it the same way I did. It seemed to me that once the tariff dispute started with the United States, that there was almost that sea change moment in the psychology of Canadians, where all of a sudden you saw the BC Premier saying, here's our top projects we want to get permitted as soon as possible. You saw it become an election issue, as we've seen in other countries around the world, such as Australia, as well as the United States. In Europe, it's maybe softer, but it's still there. So for those that are outside of Canada, I mean, what kinds of things were discussed as far as the political parties? Because it seemed like the Conservatives had a pro-mining agenda. It seemed like Mark Carney and the Liberal Party had a pro-mining agenda. For those that are outside of Canada, what kinds of things were said that you recall?
Well, certainly the Conservatives under Poilievre had a much more vocal mineral, mining, oil and gas, and infrastructure positive policy. I would say that towards the end or somewhere, in the middle of that very short campaign, the Liberal government, led, of course, by our now Prime Minister Mark Carney, started to say the same things. I think a lot of that had to do with what is happening down south with President Trump and him coming in there and talking, having executive orders, prioritizing mineral extraction. And I think that bleeds over to the human psychology aspect. No longer can Canada be complacent about developing these resources. So I think what happened in our election is almost irrelevant. It's all about what happened down south. Because let's face it, the United States had been in the same camp as Canada in terms of permitting. And look at resolution. Obviously it's very complex, lots of issues there, but that's a major world-class deposit owned by major mining companies. And I think it's 30 years into this. And there's many other examples. So the US is, let's just say for argument's sake, in the exact same category of permitting issues that Canada. One could argue Canada may be better, but nonetheless, their change of attitude, their change of leader, get back to business, sort of no BS style of Donald Trump, love him or hate him, had impacts on Canada. So we had to become productive and competitive, or we just absolutely get annihilated. At the end of the day, Canada is a very diverse economy, but we rely so heavily, or we should be relying so heavily on our natural resources. So that is our competitive advantage. I think all this talk around the 51st state is really just, one, I think he's shooting for the stars and hoping to land on the moon. I don't think he really wants to come for us as a state. I do think he wants us to have some sort of economic cooperation which supersedes the free trade or the NAFTA or whatever they call it now, and just sort of have more free trade, less economic hindrances between accessing our natural resources and other products and commodities that we produce. But nonetheless, clearly they covet our natural resources because I think the United States and the West view China, I was going to say the East, but fundamentally China as the long-term adversary, if I could use that word. And China has done a marvelous job at securing supply of all sorts of metals, from gold to zinc, literally everything, all over Africa and other places. And they're a generation, if not two generations ahead of ownership, but also how they process. A lot of people don't appreciate how you can't just mine a rare earth, you have to process it many times over until it becomes useful in terms of magnets. And the same thing for uranium. So the Chinese have intellectual property that is way more advanced in this processing and refinement of various metals than the United States. The United States needs to get with it, and it would appear that Canada must follow suit. And I'm very pleased to see that we are following suit, at least, as I said, as far as the words go. But the words need to lead, and then actions need to follow, hopefully very quickly.
So it seemed to me too, I mean, in our previous discussions, permitting was pretty much, I would say, at the top of the agenda as far as things that needed improved on. And from what I could tell, it seemed to me that there was some discussion of this, that in fact, like, just as you were saying earlier, this idea that it takes, 20 years, if not longer, to launch a mine. And it seemed to me that there was some chatter or some discussion in the election of reducing the federal role. And as we've discussed in the past, having one area or office, so to speak, where you get your permitting, not maybe three different levels of government that need to be addressed. Was that your impression as well?
Yeah, that's part of their plan to reduce, is to consolidate it. As I alluded to before, the left hand doesn't know what the right hand is doing, so on and so forth. We see that all the time. As I also alluded to, it's the province that has the primary responsibility and benefit of mineral resource extraction. When a project reaches a certain threshold, it clicks into federal territory. And so oftentimes for especially large projects in mining and extraction, those projects do click over. And so you do have federal and provincial permits to deal with. And then you layer, of course, municipal and local, and then First Nations. So there are a lot of voices that need to be heard. I think some are valid and some can be totally consolidated, as you were saying. Let's just call it the big picture government can definitely create, the minister of metals, let's just call it that, and have it all under one house. And you just have one detailed but consolidated permitting process would go a long way. And then, of course, you need to layer on, and I'll just say the local impacts as well. So you've got Ottawa and, say, Toronto having their say, and again, consolidate those, but you cannot ignore the local issues, whether that's the township or the First Nations. Just those impacts also need to be fairly heard, recognized, benefited, mitigated, and coalesced ultimately with what the government is doing. So it's no easy task. So it's not just something you can snap your fingers and do overnight. But I do think if you have a fundamental change, you set a goal, have a fundamental change in attitude, recognize the inefficiencies, set out a clean process, clear process that is no more black box. That's the worst thing. That's what scares investment and investors away, is uncertainty, the black box that it has become permitting in Canada. So if we can provide clarity, transparency, and efficiency at all levels, which is going to take some time, but we can make some marked change that, again, to be redundant and cliche, but, I want to take pride in Canada's metal industry. We once were the leaders. We've lost our lead, but we have all the pieces in place. Not only do we have, as I said, we've got huge land mass, wonderful endowment, but we have the skill sets. We're blessed with engineers, geologists, lawyers, financiers, entrepreneurs who understand this industry. Is very niche. And so we still have that intellectual property that knows how to develop and finance these projects, which is a huge advantage. Because just because it's there doesn't mean you know how to do it properly or efficiently. So Canada is, again, blessed with all sorts of natural resources, human and otherwise, to be competitive and be dominant. That's the thing. We should be dominant. I have traveled all over the world to see places like in the Middle East, in particular the UAE and other Asian centers that have just invested in infrastructure. It's new, it's gleaming, it works, it's efficient, it's electric, and it's just modern. You just don't see that here. And it's because they've invested in natural resources, ultimately. So we've missed that opportunity. We need to get back on the horse. What's happened down in the South is really, I think, when I say the South, I mean America, is the catalyst for us to get back to first principles about business, natural resource extraction, and regain our lead.
It's so true what you say. I mean, as you're speaking, I'm just thinking of Saudi Arabia, for example, as a country that is just moving full steam ahead on, I think they're calling minerals and metals the third pillar of their economy, is where they want to be with it. And, with nothing like the history of Canadian mining. And here they could, if we're not careful in Canada, leapfrogged, so to speak. So another big challenge in the industry, particularly with exploration, of course, you're with the org group, is financing. We've seen gold have a great run here. Even copper, when it's all said and done, is still healthily above $4. It's not a bad price. Some metals struggle, like nickel or lithium, but overall, it seems like the animal spirits have improved in the metal sector. What say you? What are you seeing, say, from a financing perspective? Do people want to invest in exploration yet?
Depends on what stage of exploration. Early grassroots exploration, no, we're not there yet. Is it possible? Sure, but it's going to be very expensive, and only very few projects and people will gain access to grassroots exploration. As you allude, there is metal prices led by gold, and gold tends to lead the market in general, just in terms of sentiment. Gold price has been phenomenally strong. Huge volatility, but certainly we're seeing it's holding $3,200 quite healthily this morning. However, when you look at the TSX-V index or any other proxy companies, and I speak in generalities, by and large, the juniors are being priced as if gold is $1,500. So there's just been this real disconnect between the physical price, particularly the juniors. And I would suggest even the seniors, I would say, and again, I haven't looked at this empirically, but my gut tells me gold has outperformed Barrick or other major mining proxies who are supposed to have leverage, right? So investing in the juniors, you've lost the beta, right? The beta has disconnected from investing in the juniors and getting that leverage you were supposed to get. It hasn't come yet. Now, I still have faith it's coming. Okay, but I think because we've had a prolonged bear market in the junior exploration industry, interrupted occasionally by brief windows of exuberance, only to have the rug pulled and go back down again, I do think we are on the cusp of turning around, provided, of course, we can hold these metal prices. We need additional quarters. The right people and the right projects can get financed right now. We're definitely seeing things loosen up. I've seen some bought deals, seeing some eight-figure deals. So these are things that we just weren't seeing 6 and 12 months ago. So there are definitely signs of life. It's always encouraging to see the TSX Venture above 600. I think it's at 670 last I saw. Hardly a blazing index, but better than the lowly fives, so the 500s where we've been living for far too long. So there's flashes of change, but it's far from sustained.
That is quite something that the TSX Venture is in the 600s. I mean, that is, here we are in 2025. That is quite a stat. Now, is there anything else that's really hindering progress, say, for explorers, in a sense, maybe policymakers, if they're listening in? What is it that you think can be improved upon? Are there other stumbling blocks that are preventing you from really developing projects?
Infrastructure, I think if policymakers are in place, Canada suffers from infrastructure. In Ontario, we need a road to the Ring of Fire. The Ring of Fire should not be characterized as a chromite project or anything else. It's a gateway to allow for lower cost exploration and ultimately extraction to occur. It's about reducing the risk. I use the Ring of Fire as it's known in the industry, but the same theme occurs everywhere. So if we can build road and rail to faraway places, that helps. I always reference the interstate highway that was built in the 50s in the United States. The NPV of that was probably, atrociously negative when if they looked at it in that context back then, but it's invaluable and its value incalculable in terms of the development and the jobs and just even the social connections that's created. So I think we need to invest in infrastructure. I think we should also invest in technology and a database, make a modern minerals database that includes a cohesive nationwide repository of information, geophysical drilling, any bit of information we can get. We need to standardize it, make it uniform, make it public. I think the government in their various forms should invest in flying nationwide geophysical or other types of electromagnetic surveys that inform entrepreneurs, companies who may want to explore based off the findings of this. I think that could be game changing. It would be expensive, but it would pay dividends that would be incalculable. I think the flow-through regime, if you will, the flow-through tax credits and other tax credits, sometimes they're controversial in some areas, but I think ultimately they have been hugely beneficial to Canada and its industry to allow us to benefit off depreciation that we don't incur as exploration businesses. It allows us to raise money at a premium, which is fair, and ultimately reinvest that money into the ground. It's not like we use it for salaries and rent. We use it for drilling and paying technical experts to develop these projects. It's very expensive capital, so any help we can get there on the tax side and implementing the flow through. That's the other thing. Every year I hear the government's talking about, oh, are they going to pass flow through this year? And it's some sort of question mark, which is ridiculous. It should be made permanent. Again, it's about providing clarity and establishing Canada as a or the preeminent place to do business. I think we should pay attention to how we brand ourselves as an industry. We were doing CSR and ESG long before they were three-letter acronyms. We've just always done a poor job of communicating. I think if we shifted the narrative of who we are, talked about how we're more a metals business than a mining business. Unfortunately, the term mining just carries this negative connotation going back millennia about digging a hole and waste and disasters. Meanwhile, if we talk about ourselves as if we're in the metals business, that just has a totally different connotation when it comes to productivity, things we use on a day-to-day basis. Something subtle shift like that would pay dividends over the long haul, sort of like what the oil and gas industry did a decade or two ago when they started to refer to themselves as energy. Simple but brilliant. And I think that would lend to the misinformation that I think is prevalent in our industry, prevalent in society, about painting the miners and those who explore for it as somehow bad guys, which leads to the fact that we are providing the individuals on this planet a certain quality of life that most have become accustomed to, and those who are not accustomed to strive for it We need more metals as we grow, and we need more metals on a per capita basis. So really the demand for our industry is huge, and we need to educate people. Again, to use Robert Friedland's famous quote, most people think a ham sandwich comes from a refrigerator. And I think that's a brilliant saying because it's so true. In order to use your iPhone, in order to fly on your vacation to see your friends and family, we need these metals and fossil fuels too. Not that I'm in the fossil fuels business, but it's not going anywhere for the foreseeable future. So we need pragmatic, realistic approach. So yeah, those are a couple other things I think could be done to not just help our industry, but help us as a society.
You mentioned technology, and I'm kind of curious, like I have this pet theory, so to speak, that, exploration could really be turned from a kind of difficult, very expensive business and that it could be turned on its head. We're seeing a lot of startups in this regard. You're kind of, again, boots on the ground. How are you seeing, technology and AI affect the exploration business?
Technology is absolutely critical. We're constantly utilizing and learning from technology. AI depends on how you define it. It's a very, very valuable tool. It's a tool that needs a human to operate it for now and for the foreseeable future, how I see it. But ultimately, let's call it what it is. It helps process data and recognize patterns. That's how we find mineral resource deposits. We layer data on top of data, and then there's only one way to test that, and that's to drill it to see if those data points, which suggest potential mineral economic deposit, are in fact what you think it is. The problem with AI and data in the industry is the validity of the data and garbage in and garbage out. And so to have a standardization or a uniform set of data is very difficult. Now you can wash that and you can clean it and create a more reliable database, but that's part and parcel part of the problem. I think that will eventually solve itself as we get new data and we wash the bad data out, but that's a process. But look, AI is not a panacea. It's not going to say, oh, there's a copper deposit, go drill there and you can mine it in 2 years' time. But there's no question it's a tool, just like electromagnetics was a tool that was developed by the gentleman behind tech, the Kevils. So they utilized electromagnetics back in the 50s to help them find deposits faster. Now we still use EM, but I assure you EM is not a panacea in and of itself as well. It's just another tool like AI. So don't get too excited about AI finding us deposits. I think the folks down in California who had that big high profile company, I believe it's called Cobalt, a lot of money went into that. It was branded as a AI way to find deposits. And at the end of the day, I think they acquired a deposit that was already found and sort of brushed that over. But anyways, look, it's good to see the California folk investing in the mining industry, but I think there's lots of lessons to be learned on AI.
Okay, excellent. And as we wrap up, Stephen, you're involved with the Young Mining Professionals. You're chairman of the Young Mining Professionals Scholarship Fund. What's new at Young Mining Professionals and the Scholarship Fund? What's on the menu?
Right now, we're in the process of fundraising, like we do every year, to fund these scholarships. The Young Mining Professionals is a charity. We're Canadian-based. We're interested in funding the education for those who want to study earth sciences in Canada. That doesn't mean you have to be a Canadian, it just means you have to be studying in Canada. We give 100% of our donee or our partners' funds directly to students. We have effectively a zero administration rate. Again, we're all volunteers, and we do this out of a labor for love. So we're raising money from our various partners like Barrick, Kinross, the Ore Group's been a big sponsor, and Agnico Eagle and many, many others who have generously supported our efforts to support students who want to further their education and ultimately help us find the next generation of leaders who find the next generations of mines, hopefully, and they do it in Canada. So anybody interested in becoming a partner, and why would you become a partner? One, you give back. I think that's first and foremost why you would. And two, you get wonderful exposure. We are, I think, the largest networking group in the industry. We are the largest mining scholarship fund in the industry. We do a wonderful job at profiling our partners. They get a lot of visibility. They get tax benefits because we are a registered charity in Canada. And as I said, we're all volunteers. they can rest assured that every dollar they get goes to that undergraduate or graduate student studying, whether it's geology or mining engineers. So it's a good cause run by good people who are looking to support the next generation of mining. And we need all the help we can get because it's a slog. It's always hard to raise money. I raise money in my day job with the OR group, and in my spare time, I'm doing it on behalf of students with a great group of people across the globe, the young mining professionals, but more specifically as a part of the scholarship fund, which is run here in Toronto.
Stephen Stewart, chairman of the OR Group and chairman of the YMP Scholarship Fund, thank you for joining us and sharing your perspective on this week's Northern Miner podcast.
Thanks so much, Adrian.
Thank you once again to the Indigenous Resource Network for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit indigenousresourcenetwork.ca. And thank you also to Stephen Stewart for appearing on this week's show. And thank you, dear listener, for continuing to support this podcast. If you want to help out the program, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.